ASMR video. Tonight's video is a long overdue video. I've been waiting for the right time to upload another stock portfolio update video for you guys, and I figured today was the best time, a Sunday evening. It's kind of tricky because I've always wanted to upload it, but only now am I doing weekend uploads. And so if you really think about it, had I been doing it during the week, then the video itself would have ended up being outdated by like a day, and I wanted the most up-to-date information for you guys. So I think we're gonna start doing these on Sunday evenings every now and then. But if you're not currently subscribed, please hit that subscribe button. If you're new to this channel, I am CMP. I do lots and lots and lots of ASMR gaming videos, and very so often some more traditional style face-to-face ASMR videos, and also financial stock portfolio videos. But do not get confused, I am not a professional financial advisor, so this is strictly for relaxation and entertainment purposes only. So without further ado, let's get into that portfolio breakdown. Alright, so right off the bat, as you can see, we have $34,909.01 with $88.57 of buying power. So this number is considerably higher from the last time I did a portfolio update. I can't remember when that was, probably early October, if not late September. So it's been quite a while, and as you can see, we have been just on the move lately. There's our weekly chart up 8%. Our monthly chart up 16.7%, our 3-month chart up 41%, our yearly chart up 36%. So our yearly is actually up less than our 3 months. That's crazy. And then all time, we are almost up to 10% return all time. For those of you that didn't know, I have never really shown this all-time chart because of the mistakes that I made just as a rookie trader up until about, I'd say, this point was when I started to kind of wise up and kind of diversify. But unfortunately, it just was some bad luck with timing because, all of the pandemic and whatnot took a big hit on the stock market. But we're on the come up for sure. So I did want to discuss my new strategy, which it's not so much a new strategy, but more so a tweak, a fine tune to my current strategy. I've always been a long-term buy and hold type guy, especially here with Roku. Man, look at my baby Roku. So Roku, at one point I had like 70 shares of Roku, and obviously I've sold off a few of those shares. By few, I mean like over half, and yet it's still 22% of my portfolio, so I'm still pretty heavy into Roku, and I couldn't be happier with the current price. I think this stock has untapped potential. Roku, for those of you that don't know, they are the smart TV device. They both sell Roku sticks, which you can plug into any TV with an HDMI, and it becomes a smart TV. Which honestly, what TV isn't a smart TV nowadays? But Roku is absolutely the most user-friendly device you can have. It's, in my opinion, it's just the most user-friendly. Some of the interfaces with like Samsung's built-in, smart TV interface and other manufacturers just aren't as user-friendly as Roku. And of course, you can get TVs that have Roku pre-built in. I think like TCL and a bunch of other TV manufacturers have them pre-built in, but sitting at a big return right there, 22%. I don't want to trim anymore, but you know, if we hit like 300 or 350, I might have to sell off like 5 more shares and just kind of spread it out a little bit. I've been selling off like 5 shares at a time, basically. You scroll down and you'd be able to see my history. Yeah, 10 shares at 225. That's kind of a stab, a heartbreaker to go back and look at it now. But I mean, we did probably take that money and put it elsewhere, and that money did in fact gain for us. But anyways, that's Roku. That's been my #1 holding for quite some time. And then alongside Roku, we have Trade Desk TTD at now $8.27 a share. And look at what my cost average is here. $160 for a 414% return. That is, without a doubt, will go down in history as my best ever timed trade. I mean, like, not even close. If you look at the yearly chart, this is where we bought it, like down here somewhere, right in the middle of the initial drop from the pandemic, and it's just done nothing but destroy ever since. Look at that 5-year chart, 2,776% returns. Man, what a time. What a time. But yeah, still 12% of my portfolio there with only 5 shares. And next up we have Apple, which needs no introduction. Apple actually had a kind of a bad day. It's used to be over 10% of my portfolio. Now it's only 9.8, and I didn't buy or sell anything. But you know, this looks like a solid buy opportunity. If I wasn't already almost at 10%, I would probably average down here from my 121 cost average. Apple, man, Apple is not going anywhere. Absolutely not going anywhere. I like all of this. Like, look at this. Look at this yearly trend that it's got going on. So all of this and all of this and all of this, it's all just noise. Like, it's all just a distraction from the overall trend line of the yearly chart. I mean, if you wanted to make a couple, percentage returns on, a day trade, or maybe just like a swing trade of like a monthly swing, I would say buy Apple and sell it, maybe at like 130, 125. But, I mean, that's just me just throwing random numbers out there right there. You could even sell it at 120 if you bought enough shares. You'd make like $3 per share that you swung. But yeah, Apple is definitely not going anywhere. Plus, it pays a dividend, guys. Which, matter of fact, I just got my dividend not too long ago, I believe. Just scroll down. Yep, November. 20 cents per share, and I have 30 shares, so got a $6 dividend right there, just for holding on to the stock. And on top of that, I mean, look at that trend line. So solid stock in Apple. Next up, we got Disney. Disney. I kind of wish I had a little bit more in Disney, but we have a 114.76 cost average, and I wonder, yeah, see, look at Disney. I mean, it's pretty much, it's green on the weekly, green on the monthly, green on the 3-month. It's red in the 1 year, but I mean, look at the trend line. You're just trending up. If it wasn't for, the massive shutdowns that we've had to have, Disney would probably be killing it still. But even despite that, they're still almost green in the 1 year, and they are still green in the 5 year. So Disney still feels like a solid buy opportunity as everything starts to open back up, which it's feeling like there might be some more lockdowns soon. But long term, guys, this is all just noise. Everything is, Disney's not going anywhere. Apple's not going anywhere, that's for sure. And more than likely, Delta is not going anywhere. Delta is my favorite personal airline to use. I think Delta is a great company. They've been around since when? Since 1928. And of course they're from Atlanta, so being an Atlanta guy, I just kind of have a soft spot for Delta, but they're not going to lose. They're not going to fail. They're going to still make it through all of these shutdowns and limitations. And look at that yearly chart. Boom. Look at where they are before the lockdowns. Almost $60 a share. They will be back. And it's only a matter of time. If you're looking to triple your investment, or at least double your investment over the next 5 years, I would say go with Delta, because they will be back. It's only a matter of time. And plus, while they're not paying a dividend right now, they used to pay tons of dividends, so you could probably load up, just absolutely load up on Delta right now, and then eventually once they start to issue their dividends, you'd be making a killing, an absolute killing. But that's more of my international play. My more domestic play is SkyWest, and look at that 100% buy rating on Robinhood. I mean, take that with a grain of salt, but I do know that SkyWest was a part of the financial bailout from the government that was given to some of the airlines, some of the bigger airlines. And while SkyWest, you know, they got their stimulus, a lot of their competitors didn't. So, I mean, they're just like pretty much process of elimination are going to be one of the ones that make it through this hard time for the airline industry, the travel industry. So I think SkyWest is probably has something to do with that 100% buy rating. What was Delta's? Delta's only 62%, and I mean, nobody is even saying to sell it. I mean, it would be dumb to sell at this level. It's more of a hold. And that brings us to Blackberry. Blackberry, look at that. Boom, had a great week last week. 11% returns. This is, for those of you younger audience out there, Blackberry used to be the iPhone before the iPhone became the iPhone, if that makes sense. The smartphone back in the day was the Blackberry. You know, maybe you remember, me specifically, my parents both had Blackberries before, of course, iPhone got to be so big. But you might be thinking, why would you invest in Blackberry? Well, they supposedly have a very big market share when it comes to autonomous vehicles with their QNX software, which I'm not going to go into the QNX software right now, but basically, to my understanding, it has to do with the security of autonomous vehicles, and I think Blackberry could benefit very, very greatly from an autonomous vehicle play, like a partnership with maybe like Uber or Lyft, or even Tesla, you know. That's why I'm kind of holding them. They're kind of my lottery play. We got 200 shares, so imagine it, you know, becomes a, you know, big partner with some of these bigger companies. I mean, that could be huge. That could be huge gains on Blackberry. We're still holding strong on Stitch Fix, which I have a cost average under $25 there. It's only 5% of my portfolio. But look at those returns, 44.33%. I mean, I'm just holding on strong to everything. Everything that you've heard so far, I'm just holding. Until we're back to, you know, back to the regulars, back to the norm, which some people say that this is the new norm. The way we have been living over the last year is going to be the new norm, but I refuse to believe that. I am fully optimistic that things will be normal again. But Stitch Fix is, I didn't even talk about what it is. Basically an online personal styling service that delivers personalized fixes. They call them a fix of apparel and accessories to men, women, and kids. Basically, it's like an online tailor that will send you clothes that you don't have to even go out to shop for. They'll just send it to you, and similar to like a like a monthly subscription, you can set it to like monthly, 3 months, 6 months, whatever, and they'll just like keep sending you clothes, and then you keep whatever you like and you send back whatever you don't, and you only pay for the stuff that you like. It's pretty cool stuff. Next up we have Uber, and Uber had a slightly down week, but look at that monthly, look at that 3 month, and look at that 1 year. We're sitting at all-time highs right now with Uber, and Uber, like I said, with Blackberry, is kind of another autonomous play for me. Founded in 2009, they are just getting started. The vision that I have for Uber is just a giant fleet of autonomous vehicles that they can just send out, and you order an Uber and just a car will come and pick you up and take you where you need to go with no driver, no nothing. So you just pay the fee to basically Uber, and there's little to no overhead. The only overhead that they would have to pay is for like batteries, battery charging. And then next we have Fastly, which Fastly I took a big hit on. I think I bought Fastly around the 110, maybe 120 region, and I kind of averaged it down. Truth be told, I own a little bit too much of Fastly. I probably will kind of trim it down once it gets back to that $100 range. I'm holding it. I know it's going to be back. This was based on the TikTok news of Fastly is a big proponent with like cloud computing, meaning, the way that TikTok, you can just scroll and a video just starts playing. Well, you ever wonder why that video doesn't need to render? It's because of cloud computing, and like when you click on a YouTube video, it has to render. Well, you hardly ever have that problem with TikTok or like Instagram or any of those other companies. I don't know if Instagram might actually. I know they're not with Fastly, but TikTok was closely related with Fastly, and I think this was some negative news behind TikTok getting like banned in the United States, and then kind of settled it, kind of consolidated, and now we're back on the rise. So I'm gonna hold it. I'm gonna keep holding it. 58% say buy, 25% say hold, 17% say sell. Me personally, I am a buy and hold. We have 50 shares of OUSA, which for those of you who watch Shark Tank, this is Kevin O'Leary's ETF. It tracks an index that selects and weighs large cap US stocks based on 3 factors: high quality, low volatility, and a high dividend yield. And a matter of fact, I think I have the top 5. You know what? I don't think I do. I think the top 3 are like Johnson & Johnson, Microsoft. I remember Microsoft was number 1. I think Home Depot was number 2, and then like Johnson & Johnson maybe number 3 as far as factors that go into that OUSA ETF. So we got 50 shares, and it pays a monthly dividend. We got a dividend of $1.31, so about 5, almost 6 cents per share. We had 22 shares at the time, so next go around we'll have 50 shares, and I think I'm gonna keep buying that until we have, I don't know, maybe like 250 or like even more shares. I'd really like to get a strong ETF that just pays monthly dividends, and I think that this one might be the one I go with. And then last but not least, this was my the whole point of me making this video was to talk about my new fine-tuned strategy. So for those of you that have been waiting around for that new strategy, here you go. So everything that I have just mentioned, and we'll get to this little call here in a second, but everything that I have just mentioned in this video are long-term holds for me. Like I said, if one of them gets to be way too big and I need to, trim it, like maybe if Trade Desk hits 1,000 or Roku hits like 300 or, Fastly hits 100, I might look to kind of sell off a little bit of that position and maybe open up a new position, or maybe add to one of, my ETF, or, one of my lower percentage holdings. Or I can use that money and kind of snipe with it. So I've kind of gotten a little bit more aggressive with day trading, and because Robinhood will only let you day trade if you have $25,000 or more in your portfolio. So now that I'm over that limit, I can day trade to my heart's desire, and that's kind of what I've been doing over the past week. I'd say I did a good bit of day trading, and I was really honestly pretty successful with it. One of the companies that I bought, Blink, let's see here, Blink was something that I bought 100 shares of, and I think I bought at, let's see here, bought 110. I think I did it twice. So market buy 100 shares at 15.79, sold at 16.26. So that was for about $50 of profit right there. Then I bought back in 110 shares at 16.81, sold 110 shares at 17.85. So that was over $110 of profit right there, all in the same day. So that's, $150, $160 made, almost $170 made just from those two trades right there. And then I bought 100 shares at 19.09 the next day. And that stop loss, I had a stop loss set at 21.25, so that's yet another $116 of profit right there, just for going in and out, in and out, in and out. And now I have taken that money and bought this WTHR or WTRH Wader Holdings, which, if you look at the weekly compared to, or the monthly compared to the 3 month or the 1 year or even the 5 year, this has been something that's been all over the place. But this company engages in an on-demand food ordering and delivery business. Its platform connects local restaurants to diners in underserved markets. The firm's mobile and desktop ordering platforms allow users to browse for local restaurants, customize menu items, and pay securely from mobile phones or computers. It sounds to me a lot like a little bit more of an in-depth Uber Eats or, DoorDash, whatnot. But, so as you can see, we took a pretty hefty position here. I bought that on Friday. Not only did we do that, we bought 10 contracts that expire on 12/18 at $4 a share. And a lot of analysts that I follow on Twitter and just different media sites were saying that this is heading to $4 like this week. They thought that this could hit $4 in the next week. And if you really think about it, if it has a week like it did this past week, if it continues on this trajectory, then we will be at probably $5 by the end of next week. So I am super, super excited to see what happens with these calls. They could really go crazy. Right now I'm sitting at 14% return on some calls that I bought on Friday. If it goes up $1, guys, I could be looking at some major cash. So fingers crossed there. Go ahead and hit that like button so we can get Wader Holdings to $5 in the next week or two. acorns is because I sold all of my acorns. Kind of restarted from the ground up. When I quit my job, I felt like I needed to pay off all of my credit card debt. And so I went ahead and did that. And so now we are, starting fresh on acorns. I think I'm doing like $25 a week over there. But most of my plays are still here in Robinhood. I still am planning on depositing $100 a week into Robinhood to just keep my investments, keep my cash flow coming into my investments, and hopefully we can keep being aggressive with these little snipes here and there and really make some cash on the side outside of, just our YouTube streams and our YouTube, ad revenue, stuff like that. And hopefully this video gets a lot of views and that'll be some more ad revenue. But other than that, guys, I want to say one more thing. If you want to become a member, it is only $2 a month to become a member. It's the first link in the description. Also, I do have some merch if you're interested in that as well. So check that out also. But that's going to do it for this video. I hope you all had a great weekend. I will see you tomorrow for a stream at noon. Probably playing more Call of Duty, grinding out that DM Ultra. But like, comment, subscribe, and I will see you all in the next one. So, if you're watching this during the day, then have a relaxing rest of the day. And if you're watching this at night, then have a great night sleep. And good night.